Good afternoon to many of you, and good morning to some of you. We are facing, during COVID-19, an interesting time and a most challenging time, a time that certainly I in my lifetime has not experienced anything like this before. So I wish you and your family everything of the best. Stay healthy, stay safe, and hopefully stay sane. In purpose of the agenda for today, I'd like to speak a little bit about Carrick, tell you a little bit about Carrick Property, introduce you to a gentleman by the name of George Ratford, representing IP Global today. George will then take you through the interesting opportunities that exist within Carrick, within IP Global, the global property outlook, together with a very, very exciting proposition based out of Berlin, which I've been working on in conjunction with George now for a long period of time. In terms of a little bit of detail of Carrick, I, together with 6 other individuals, 5 years ago, felt largely disillusioned with the global financial advisory space. And we set out to establish Carrick to really change the face of a deficit between the interests of an individual, the client, and that of the financial advisor. And we felt as though that the interests of the financial advisor and the financial advisory firm was coming ahead of that of the client. And therefore we set out to do something different, to start a firm initially based in South Africa, to really put the interest of our clients first and to provide truly a global financial planning business. At this stage, we have over 150 members of our team. 50% of those are currently within an advisory capacity. 150 people spread across 4 countries and in 6 offices, and a very unique proposition based out of Mauritius, in that we've been granted 3 global investment planning licenses to provide cross-border financial planning advice. To date, we currently manage over $500 million worth of private client assets, and I'm pleased to say that we have been the recipient of many global financial and investment advisory awards over the last 4 years. We also are a proud corporate member to an organization called CISI. But it certainly doesn't stop there. We have a very unique understanding of the future and what the future looks for us. We call it the Carrick 2020 Plus vision, whereby we are looking to onboard a further 200 level 4 qualified and above financial advisors. We look to amass over $1.2 billion worth of clients' assets that we'd look to manage. And we look to expand our presence across the African continent to a further 10 new offices in the countries marked in red below. But really, what makes Carrick different? Well, we call it the Carrick concierge proposition. Carrick concierge is very simple. All our clients are offered a state-of-the-art online portal, a portal that enables them and their families to access their investments, their retirement planning, and their bank accounts. Today, we're going to be talking about international property and the opportunities that occur in the international property market. We have various accounting services and taxation services, both corporate and for personal clients. We offer risk assessments to all our clients' portfolios, global estate planning, but also local estate planning. We offer a full portfolio assessment of all our clients' assets. We have a highly qualified foreign exchange team that assists our clients with their requirement for foreign exchange. We have an international and corporate structuring team to ensure that our clients' affairs are structured in the right manner. We have private banking facilities scattered around the world. And lastly, we assist clients with the sale of their business and the onboarding of equity partners. But today is not about wealth planning insofar as it's about property investments. And I'm asked the question on a regular basis, why property? Why did a wealth planning business diversify into property? And the answer is very simple. Over the last 5 years, we've been asked by many clients and prospective clients to assist them in their property purchase. We've seen that clients have made terrible financial planning and investment decisions in property that has led to serious capital losses. And those capital losses have primarily been caused by the lack of due diligence on A, the developer, and B, the location in which that unit or that property is purchased. And therefore, by putting the client's interest at the forefront of what we do at Carrick, we decided to open up a property division and partner with a company called IP Global, one of the very, very best international property expert teams that I've come across. And therefore, without further ado, I'd like to formally introduce George Ratford. George Ratford is the Regional Director for IP Global in the UK, as well as Africa. And George will continue to explain about some unique opportunities, the outlook of global property, and the single biggest used word at the moment, the coronavirus. So without further ado, I'll hand over to George.
Brilliant. Thank you very much, Craig. Big welcome to everyone all around the world. Thank you very much to Craig and to Carrick Property for inviting me to present on this webinar. So yeah, first I'd like to start by wishing everyone well, and I hope you and your families are safe and well in these challenging times. So let's have a quick look at IP Global, and just want to explain how we differentiate ourselves to other property companies around the world. So IP Global, we're an international property investment company, and we've been set up now running for over 15 years, founded in Hong Kong. Our head office is still in Hong Kong. We've got a big presence in Asia, the Middle East, Africa, and Europe. So 15 regional offices globally. And our business model really is to work with individual clients anywhere in the world who want to add the strength of direct residential property to their investment portfolios. We work with them and manage that process on behalf of the client from start to finish and offer a turnkey solution. So to date, we've now invested over $3 billion globally into 30 different markets all over the world, and delivered some fantastic returns for our clients across all those markets. Our business model is very much to go into a market, undertake the research and the due diligence, then manage every part of that acquisition process and the management process for the client. So, for example, appointing the lawyers on the conveyancing side, securing the mortgage financing for the client, so plugging the client's requirement into the most suitable lender to meet their requirements. And then when that property completes in a year or two, helping the client to manage that asset, secure a tenant, collect the rental income, then 5-10 years later, helping with the resale of that property back into the secondary market. So why IP Global? I just want to bring this back to our business model. For me, the most important point of any investment decision that anyone makes is always the research and the due diligence behind the investment. And at IP Global, research is really at the forefront of any investment decision that we make. And that means that we can mitigate any risk and also ensure that clients' investments are very safe and protected, and also ensure that they deliver very strong and robust returns. We have an in-house investment team who undertake all the research and the due diligence on global property market. They look at a number of different factors, but to give you a few examples, they'll look at the underlying economics, the strength of the local economies, the countries we're looking to invest into, the legal structure, the financing options available, what mortgages can our clients achieve, what's the taxation environment, is there a currency play, and they'll look at the supply and demand of property within that market. key government investment schemes, employment nodes, infrastructure improvements, population trends, demographic trends, affordability within those markets. And we'll form a house view as to whether or not that country makes sense and represents a good investment opportunity at that point in time. And if so, where within that market, where within that city, which borough within that particular city, i.e. somewhere in London or Berlin, which suburb is going to deliver the alpha return for our clients. And once we've identified that, then what IP Global will do is we will take a position within an off-plan residential project, and we will take a number of units, let's say 50% of an off-plan development, onto our balance sheet. So we take a very strong financial position within these projects. We're buying in bulk upfront to do a number of things. One, secure preferential terms on the purchase in terms of pricing, early access to market, and exclusivity. And our clients like that because it means our interests are aligned and we're presenting them with a very unique investment proposition. And then finally, a lot of our clients are very busy individuals. They have very demanding jobs, and they really just want to add the strength of direct residential property to their investment portfolio without some of the hassle that can come with investing in a foreign asset offshore. And our end-to-end servicing and managing that process from start to finish, including, as I mentioned earlier, the legals, appointing the lawyers and securing the investment, the after-sales management, securing the tenant, collecting the rent, and further down the line the resale. So those 3 points are really paramount with what we do at IP Global and why we differentiate ourselves to other property companies, and notwithstanding the fact we've been here for a long time, over 15 years, and delivered some fantastic returns for our clients over that period. Okay, so moving on now. So the main topic of today's discussion is coronavirus and the impact on the global economy. Very sort of broad subject, which I'll try and answer in as quick and accurate as possible. So COVID-19 obviously is a tragic global pandemic that swept across the world, started off in Asia and then into Europe, and probably most prevalent now in the US. Thankfully, the situation is stabilizing, but it couldn't really have come at a worse time, if there is ever a good time for a pandemic. But coupled with the coronavirus, we had decimation of oil prices because of the disagreement between Russia and Saudi Arabia, and the complete inability of OPEC Plus to manage that situation and constrain supply, which led to oil prices being completely decimated. So the double black swan event, really, which has had a detrimental impact on the global economy, a significant impact on the capital markets, which I'll come on to. But really, supply chains is a big area which we're only starting to see now, the ramifications of these supply chains around the world being cut off. And this is becoming more and more obvious in terms of the impact of coronavirus, as we're seeing a lot of global businesses publish their Q1 results, which are very poor. So over the coming months, we're going to see big downturn in the global economy, as we see the impact of cutting off all these supply chains around the world as a result of coronavirus, obviously coupled with the plummeting of the oil prices. This has led to some significant decisions being made by global central banks. I personally feel that the central banks around the world have managed the situation as well as they possibly can, and governments have offered some significant stimulation and support for individuals and businesses to limit as much as possible the impact of this double black swan event. But ultimately, we have to accept the fact that we are in a recession. It is very different to the previous financial crisis in 2007 and 2008. Banks are better capitalized, and my view, and broadly the view of other professionals around the world, is it's been a very sort of hard, short impact on the global economy, but it certainly will not be anywhere near as long-lived as previous financial crisis, because the banks are better capitalized, and I think we're all in a better place. People aren't as highly leveraged to deal with the impacts of the coronavirus and decimation in the oil prices. So With that being said, we will see a significant contraction of the economy. What you can see here is the IMF forecast for the global economy as of the start of the year in January, and then the reforecast from the 1st of April. So you can see in 2020, we were looking at 3.3% growth, positive growth for the global economy. We're now looking at 3% negative growth, so a swing of 6%. But next year, we're looking at a very strong rebound. So the rebound will be stronger than originally forecast by the IMF at the start of this year. And that will be very good for us all as everyone returns to work, lockdown comes to an end, and we can resume a relatively normal way of life. Okay, so I think that covers the coronavirus, the oil price dropping, and the impacts and ramifications that's had on the global economy. I want to look at now at the importance of diversification within your investment portfolio. You can see there that's a number of the major stock markets around the world and their performance in Q1 of 2020. So if you had all of your eggs in that basket, then you've probably had a pretty rough ride over the last few months. We've seen corrections of anywhere from 20 to 30% on a lot of the major exchanges around the world. We have seen a slight correction, quite a significant correction over April, and a significant recovery. However, I think as a lot of these company results continue to come out and are very negative, we will be in for a very bumpy ride in the capital markets for the balance of 2020. I think it'll be very much up and down. So the reason I showed you that slide was just to reiterate the importance of diversifying one's portfolio. You can see there the performance of different asset classes, 2010, 2019. And if you had all of your investments in a single asset, then you have the inability to weather any financial storms and black swan events that impact that asset class. So the message really is ensure you're well diversified and ensure you have a mixed portfolio so you can weather these extraordinary events and you protect your assets. Okay, so in terms of the outlook for global property, it's a very difficult question to answer. I think in the short term, there will be fairly flat market for the coming months. But I think the best way in which I can answer this question is to look at the benefits of international real estate and why we invest in property. So naturally, we're seeing huge amount of capital flows out of the equity markets. A lot of people have been burned. A lot of people have lost quite a lot of money, and they want to reallocate some of that money into more stable fixed assets. So gold, I think, will do very well over the coming 12 months, and also property as one of the favoured fixed assets out there. Why do we invest in property? For long-term wealth generation. It's a fantastic tool for intergenerational passing on of one's wealth. It's stable, and property's biggest downside is its lack of liquidity. But in times like this, that's actually its biggest strength because it lacks the volatility that you can see in more liquid markets like stocks and shares. The reduction in the central bank lending rates has been brilliant for our clients and for property investors around the world. It means your cost of finance is less. That dries up the overall return on the investment. I think you're going to see a lot of negative returns or companies not paying dividends for 2020 and maybe even 2021. Their profits are hit. And what we see within property is a very solid rental income. So again, I think this is why a lot of investors now are going to favour property as an asset class over the coming 12 to 24 months. Notwithstanding all those points, we are in the depth of sort of a financial crisis, and that will create great opportunities. So IP Global and our investment team will be looking for the best opportunities out there. So the investments we currently have and a lot of the investment opportunities that will come to market over the coming months will enable us to present some fantastic opportunities for our clients. Okay, so let's have a quick look now at the IP Global Global Real Estate Outlook. So this is our house view on global property markets, and it essentially is our outlook on where we see good opportunity around the world. So very much focused on the European markets at the moment. The UK has been one of our biggest markets historically, with $2 billion of investment there. A lot of it's gone into London, And over the last 5 years, we've diversified out to key regional cities, Manchester, Liverpool, Birmingham, Leeds, and delivered some great returns for our clients. And we're looking at key cities with very strong underlying economies, very well connected, very strong universities, very strong employment nodes in their own right, with a massive supply and demand imbalance, which has delivered some very positive capital appreciation, very strong rental yields for our clients. So those markets we'll continue to invest in. I think London will really return to the forefront of a lot of investors' mind at the end of this year. And they'll see great value of prime London assets that have been discounted heavily over the last few years, especially with a nice currency play there. So we're in the UK, and we will be for the foreseeable. A few other markets there we're looking at. Sheffield, very excited about that, will be coming soon. Glasgow, and also Edinburgh. Outside of the UK, we've been very busy in Germany, which I'll focus on a bit more in the presentation, but Berlin, Leipzig, and we're also exploring Dusseldorf and Frankfurt. And then finally, our third major market is in Portugal. We've been investing heavily in Lisbon and Porto over the last 12 months. Really like those markets, very strong underlying economies, probably one of the standout countries in terms of economic recovery off the back of the last financial crisis in 2008, 2007, 2008. And a huge tech boom taking place in both those cities, Lisbon and Porto, very strong universities and great value for our clients. And not to mention the fact that there's also various benefits of buying property for some clients around the world in Portugal. Of course, I'm alluding to the Golden Visa program. So we don't have time in this webinar to go into more detail on all of those markets, but please do come to myself or your Carrick property advisor for further information. I'm going to focus on Germany and then look at the new project we've just launched there, the Ambassador. So Germany, for me, the standout performer within Europe and probably the world in terms of how to manage a pandemic. It's typically German, hugely efficient, and they're going to come out of this stronger than anyone, in my view. They've had one of the lowest recorded death rates. And they've been military about how they've gone about it. And even before this, Germany was, my favourite investment market globally. A number of reasons. It's the fourth biggest economy in the world, biggest economy in Europe. I really love the ease of investing in German property. You assign power of attorney to the local lawyer, and they manage a lot of the legwork on your behalf, which makes it a very easy market to invest into. Seen some fantastic returns in our key cities, Berlin, Leipzig, over the last 4 or 5 years, and even the other German cities, double-digit returns from a capital growth perspective, huge rental escalation. The mortgage market there is very good, great for our clients based in Africa and maybe some other more challenging markets for financing. Very easy to get financing, limited restrictions, and great rates, anywhere from sort of 2 to 2.9% fixed rates on mortgages. And if you hold property assets within Germany for a period of 10 years or more, then there's capital gains tax benefits, essentially exempt from capital gains tax in Germany. Okay, just gonna have a quick look at Berlin and then our Ambassador project. So Berlin is in my view the best or one of the best property investment markets in the world. It's obviously the capital and political centre of Germany. Despite that fact, it really has lagged very far behind a lot of the other German cities in terms of property values. So we got in there 5 years ago when we saw fantastic value. We've delivered some great returns for our clients. But why do we like it? Huge supply and demand imbalance, very, very strong universities. You've got 185,000 plus students for education. It's been highlighted by PwC as the #2 city for investment prospects in 2020, and it's the #1 centre for startups within Germany. So almost 70% of the startups that take place within Germany happen within Berlin, which I always find an absolutely staggering fact. So the lack of supply, the very strong student population, tech startup boom, and a huge demand for properties from institutional investors and retail investors has had a very, very positive effect on capital and rental values. So we've been very busy over the last 5 years. We've done 15 projects in total in Berlin. You can see out here to the west, Charlottenburg, which is a prime residential area. We've done a number of projects. Central Berlin in Mitte, the orange marker there, the Ambassador, that's our new project, which I'll come on to a bit later on in the presentation. And then we've done a couple of projects to the south in Newcombe, which has been very strong in terms of returns. It's a very up and coming area. And then out to the east in Lichtenberg, we've done a handful of projects there as well. So we've been very busy in Germany and Berlin in particular, and offered a whole range of different investments for our clients, different price ranges, different investment stories behind them. So the projects I'm just going to look at quickly, the galleries and Coda, and then I'm going to go into the Ambassador. So the galleries and Coda are past projects of ours. Just really want to show you a snapshot of our track record. So the top one is the galleries. We got into that investment in 2017. Boutique development, we got 7 units in total. We got clients in there just over 5,000 euros a square metre, and we're looking at valuations now of pushing on 8,000 euros a square metre. So we're looking at a 3-4 year hold and delivering returns for clients pushing on 50%. So really pleased with how that investment's worked out. And the second one is probably the most relevant to what I'm about to show you. This is Coda, which is a micro apartment development, which we launched again in 2017. So a mixture of studio units, a few one beds, and we got clients in there again around 5,000 euros a square metre. And we're looking at valuations now of between 7,000 to 8,000 euros a square metre, which is representing a capital uplift of anywhere from 27 to sort of mid 45%. So 2 really standout examples there of some of the returns we've delivered to clients within Berlin. So that leads me nicely on to the Ambassador, which is our new project that we've just launched. This is the most central Berlin project we've ever done, right in the heart of Mitte. You can see you've got the TV tower and Alexanderplatz to the north of the property, and this is our development here. Very short walk from the river. It's suitably called the Ambassador. You can see this is our project here with the orange marker. We are surrounded by embassies. That's brilliant for tenants, brilliant for buyers when clients want to liquidate the property into the secondary market. Just to point out a few key areas. So to the north of the property, we've got Alexanderplatz, which is a big retail centre. To the left here, marked to number 6, that's Europa City, the biggest regeneration project within Berlin. Huge amount of commercial, retail, residential units being delivered there, which again is great for tenants and buyers alike. And the central station is also there, which can take you pretty much anywhere in Europe. And then down to the south here, Potsdamer Platz, which is the familiar pictures we all see of Brandenburg Gate. So this is really prime heart of Mitte, and we're a short walk from that. Okay, so the project itself is a landmark development, 77 units, all studios. What we've got here is similar to Coda. It's a micro apartment development. For those of you who are not familiar with micro apartments, by definition, it's units ranging in size from 20 to 35 square meters, very much targeted towards millennials, young professionals who've been priced out of central city rental market, not just in Berlin, but around the world. Yet they still need to be close to the key employment nodes where they work. So what a lot of developers are now doing is creating smaller apartments, i.e. micro apartments, which obviously come with a lower rental price, which enable young professionals and millennials who want to be close to the city, want a plug and play property solution to be able to rent and still be close to their work. And this is a phenomenon that we've seen develop over the last 4 or 5 years, and really is going to be very, very prominent in the future in cities across the world. So very smart development. We've got a supermarket, a cafe, a bakery, ground floor. You can see here on the podium level, there's a communal garden which doubles up as an outdoor gym area. Again, fantastic for young professionals. The developer, we've worked with them. This is our second project. Great developer, Adam Europe Real Estate Investment, not just based in Germany, got developments across Europe, very strong ties with the US as well. So we're delighted to be working with them again. We know they deliver a good product, and we know clients will deliver very good returns here. So excellent developer, excellent location. Completion is Q2 2022. We've got an exclusive allocation for Carrick property, 14 units on the 5th and the 6th floors. Prices here start at €245,000. We've put a 5% rental guarantee on these units for all Carrick clients exclusively first 2 years. We've got pre-approved mortgages on all units, around 60% loan to values, and interest rates fixed for 10 years from 2.9%. We're looking at an equity requirement here for clients of around €120,000, spread out over a 10 to 15 month period, which is your initial deposit, and then various deposit payments over the construction period. And the estimated return on equity here, we're looking at 10% plus, which is based on a 10-year hold on a 60% leverage mortgage with a 40% equity component. Okay, international mortgages, and then we'll conclude the presentation. So the question we often get asked by clients, especially clients maybe in Africa regions in particular, can I, as an expat or African national or foreign national anywhere in the world, acquire financing in the UK, Germany or Portugal? The answer is yes. Obviously, we assess clients on a case-by-case basis, but we can help individuals, self-employed, permanently employed, based more or less anywhere in the world, especially if you're buying in Germany. It's probably the easiest market to leverage. But help clients based anywhere in the world. We'll assess you on a case-by-case basis, understand your financial circumstances, get pre-approvals on loans before you commit to an investment, and obviously your lending will dictate the investment strategy we recommend for you. An indication of rates there: UK, we're looking at sort of 4% interest rates, Germany 2 to 3% fixed rates, Portugal from just under 2% up fixed rates, and loan to values of between 50 to 70%. Obviously, this is a science in itself, mortgages, and anyone who's got any questions on that, please come to myself or your Carrick property advisor directly. So thank you for listening. And in conclusion, going back to the original topic, coronavirus and the impact on the global property market. So coronavirus will create some short-term volatility, but also some very strong investment opportunities, which IP Global and Carrick Property will be at the forefront of to take advantage and deliver some great property investments for our clients. Fixed assets will continue to be the favoured asset class, certainly in the short term and the medium term for clients around the world, as they take funds out of capital markets, no interest in banks. If you've got savings, people are looking for where they can get a good solid return. Central banks reducing their rates, brilliant, cheap finance for our clients, drives up the overall return on equity. Rental income is an inflation hedge, and in these times of uncertainty, where you're not going to be paying dividends in the main from your share portfolio, people are really gravitating towards property as a great income producing asset. And it might be cliche, but there is a finite supply of property, and people will always need a place to live, and that will continue to play into our hands. And ultimately, coronavirus will come and go, and we need to take a long-term view here and plan strategically for our future. We're taking a medium to long-term view on property as an asset class. We know our clients will make money, and it will be a great generation tool for them and for their children. So thank you for listening, and we can do some questions now. So I think a number of you have probably submitted questions online.
George, I have a few from my side if I can start, but first of all, I'd just like to thank you very much for a very, very insightful presentation. You and I started talking about the ambassador development over 6 months ago, and more I hear about it, the more and more excited I'm getting at the idea of what lies ahead for the Berlin property market, but equally so for our clients. George, the first question that I can see here is from Sue in Cape Town. Sue says that she's very, very interested in UK property, but is wondering why IP Global have chosen Berlin. I think you touched a little bit about that on the presentation, but can you just literally spend 30 seconds on why Berlin over the UK?
Yeah, I mean, the UK, thanks, Craig. So the UK remains one of the favoured investment markets for IP Global and for a lot of our clients around the world. A number of reasons: people feel comfortable with the UK, historical ties with ancestors, aspirational investments to hold assets there. Maybe children are going to be educated there. They want some sterling exposure. Lending rates are still strong. And you know, it's a great market for investment. So we still believe in it, and it's still, you know, one of our biggest markets. For me, I personally favour Germany at the moment, especially for clients based in locations which might be more challenging. Let's say, for example, secure financing from where they're located. And if you're buying in Germany, the purchase process is very easy. The financing is very straightforward. Very limited restrictions because we're not going directly to a traditional bank. Our lender is a pension fund, so they're not as onerous in their requirements. The lending rates, you know, anywhere, if you can get a property investment with a fixed interest rate from as little as 2%, fix that for 10, 15 years. I mean, for me, that's just, it makes so much sense to support a very strong growth market, which is what we see in a lot of those German cities, and very, very solid rental market. And also from a capital gains tax perspective, obviously you've got the benefits of buying in Germany if you hold that asset for a 10-year period or more. So in answer to your question, Craig, or Sue from Cape Town, UK is a great market, we still love it, but Germany, you know, for a number of reasons I mentioned, ticks a lot of boxes.
Perfect. Okay. A question from David in Nigeria. I live and work in Nigeria. Am I going to get mortgage finance to buy a property in Berlin?
Yeah. Okay. So the financing in Germany is most straightforward out of any market that I've been working in over the last 15 years. So I've got a number of clients who are based in Nigeria and Ghana who've secured lending for investments within Germany over the last couple of years. So in answer to your question, yes, we need to assess it on a case-by-case basis. And not just Germany, but there's lending options in the UK. Access Bank is an example, a good UK product, Nigeria-based clients. But yeah, we can get you financing, David, and happy to assist on that.
Perfect. I'm just going to take one more question because you can imagine there are quite a few. Let me just scroll down. This question is from Patrick. IP Global seem to be focusing on the European markets, and from what I see on your website, less in the US and in Australia. Why is that?
Okay, thanks, Patrick, for your question. So we've been going 15 years. We've invested in various markets around the world, in Asia, Middle East, not Africa, but South America and Europe and North America. So we were very, very busy in the United States. We saw the bottom of the market in the New York property market back in 2011, heavily invested in that market and delivered some great returns for our clients. We also were very active in San Francisco, a couple of projects there. Chicago, we did a handful of projects, and one project in LA. And we had a good run there for 2, 3, 4 years. But we felt the yields were massively compressed. The operating costs were very high, property tax and homeowner association fees. And then, in addition to that, the financing became very challenging. It's probably one of the most restricted markets that I've dealt with in terms of foreign buyers securing lending in the US. So we've been there, we've done it, we've delivered some great returns, but we feel that better opportunities within the European market. In terms of Australia, similar sort of investment volumes, over $150 million invested in Melbourne and Brisbane over a 4-year period. 15, 20 projects we did in those markets, and again delivered some great returns for clients. We pulled out of that market a few years ago because the foreign investment tax and stamp duty tax became very onerous, and the big 4 banks overnight decided they're going to put their brakes on lending, not just to clients based in more challenging locations, but pretty much most clients around the world. And obviously leveraging is a key part of what we do as a company to get the alpha return. So we pulled out of Australia for those reasons a few years ago. And we will keep all these markets under review, Patrick, Craig, as we go. But we see best opportunities, the best growth and the best lending in particular within the European markets at the moment. That's why our focus for 2020 remain in those markets.
Okay. George, we said at the beginning of the presentation that we were going to try and limit the time, so we're going to have to stop it there. I would like to thank you, and I'd like to thank everyone who has logged in today. I hope that you got something from it, and there's something there that is going to assist you in your decision-making process. It's something that's going to help you decide on whether Berlin and the Ambassador is a location that you wish to explore. I'd ask you to contact the Carrick advisor who invited you on to today. If not, the details are on the screen now. Please have a look on the Carrick Property website. Again, George, thank you very much for your insightful presentation. And finally, as I started, I wish to conclude, I wish everyone everything of the best for this challenging time. Stay safe, stay healthy, and stay happy. Thanks very much.
Brilliant. Thank you, Craig, and thank you, everyone. All the best. Take care.